Look at the first primary process, and that is that you have to submit an application. We are not going to talk about sourcing here because that is not a process as far as the organization that is lending is concerned. We are assuming that the file has been sourced and now is coming into the system. How does it come into the system? Different ways. But the customer has to submit the first main document, which is the loan application form, and there are other documents which we will talk about as we do this module. As we finish this module, we will take the natural step to the next stage where the file that has come in from the customer, which he has submitted, actually gets what is called in housing finance parlance logged in. It is logged into the system. So let's start with the first one, then we will go into the login, and when we are discussing the login, I will introduce you to the third step so that at every step we know what's coming next. So the first thing the customer who is planning to apply for a loan, be it an individual, be it him and his spouse or his parent or his child, has to collect an application form. How does he obtain that application form? Well, all of you can also obtain it. Go to the website of any of the lending institutions, you will be able to download the form. That is one of the main methods by which a customer potentially who wants a loan can obtain an application form. Now, every application form for each institution is different, and yet it is the same. It's different because some of the contents might be laid out separately and differently, the colors might be different, the terminology might be a little here or there, but the general requirements of a loan application form will be common. Now, besides the website from where you can download a loan application form, you can also collect it by walking into a physical branch or an office of the lending institution. And the third way you can do it is through what are called direct selling agents. Now, what are DSAs? Very quickly, DSAs are agents who facilitate the process of you applying for a loan and you as a lender getting a new application coming in. Of course, they get paid for that, and they also have available application forms of various institutions depending on which institution you plan to apply to for a loan. Now, once the customer has collected the application form, he has to complete it, and strongly as a borrower I would suggest you complete it in totality. Get the spellings right, keep the information full, keep your handwriting neat if you're writing it out, and then you submit it along with other documents. In a moment I will tell you what generally those documents are, but again you can either submit it at an office of the lending institution or you can submit it online. Increasingly, online seems to be the more acceptable and popular method of submitting a loan application, especially during the recent pandemic that we have been having. You can also give it back to the DSA, who will put it together in a file and submit it to the lending institution of your choice so that he also gets linked to that application and then gets his payouts. Now, along with the loan application form, you also need to submit certain documents. Some of them are mandatory and some of them can be submitted later. Now, an example of a mandatory document which you have to submit with the loan application form are what are called your KYC documents. A loan application without KYC is meaningless because the file will not move forward in the lending institution. So KYC documents, as we all know, are a PAN card or Aadhaar card or any other listed set of documents which are identity proofs to show that you are who you claim you are. They have to be self-attested and copies have to be attached along with the loan application form. Now, depending on your profile, are you self-employed, businessman, professional, salaried, freelancing or anything or any such activity, you have to submit documents that evidences your income. So, for example, if you are a salaried person, you would give your salary certificate or your tax returns. If you are self-employed, you would give your balance sheet, your P&L and your tax returns. You would also submit copies of your bank statement. You will also submit, if you have ready by then, your property papers, the property that you are planning to buy. Now here it's important to quickly understand, and we'll talk in more detail as we go forward, that You could apply for a loan even without knowing what the property is that you are looking for a loan for. The reason you would do that typically is that you still haven't identified the property, and more importantly, you want an indication of how much loan will actually be available to you, so that coupled with your own contribution, that defines your budget, and your search is therefore more realistic and more objective around that budget. Therefore, that means that you can apply for a loan even if you have not selected a property. It's called different things. It's called an in-principle approval, a property not identified approval, but the lending institution will take that form and will appraise you and sanction you a loan in principle, which is of course ultimately subject to you identifying a house, giving the loan documents, the technical appraisal, all of which we will talk about very quickly. Now, the file is with the lending institution, either directly or through the internet or through the DSA. What happens to it from here? That is the second process that we are going to talk about, the file login. Most lending institutions charge a fee to process your loan, to complete the legal documentation, to get the technical appraisal done. By whatever name called, processing fee, legal and technical fee, most of them do charge some fee to recover their costs. This fee is payable along with the submission of the application form. However, some institutions might collect it later, but certainly before disbursement. Again, each institution will have its own policy whether they should refund all, part or none of the fees if for any reason the loan is not sanctioned or disbursed, either because they find you not credit worthy or you decide to withdraw it as a borrower, the application that you have made. The application fee is either a percentage of the loan with a cap, or it's a flat amount, say 5,000 rupees, 10,000 rupees, etc. And the refund also can be a percentage or all or none of the amount that you have paid.